Hello and welcome to the Skagit and Island Real Estate Podcast. I'm Paul Balzati. I'm here with Cynthia. Welcome, Cynthia.
Thank you, Paul.
And I was going to say your last name, but I can't say it properly. So can you say it for everybody?
Yes, Barajas.
Barajas. That was better, right?
That was
my
better.
best one. Okay, so Cynthia's here with us today, and we're talking about first-time home buyers. We're talking about Skagit County, buying a home in Skagit County. And I want to talk to you about kind of the first-time home buyer process. Because I think right now we've gone from a seller's market more to like a buyer's market. And so there's opportunities there for home buyers who've been wanting to get into the market. And finally, there might be some opportunities with more selection, right? And more negotiation possible and prices softening a little bit. So let's get right into it. So if you are a first-time home buyer and you're wanting to buy a home for the first time, what are your recommendations as far as like how to get started?
Ooh, I have a lot.
Okay.
But I think to simplify it, I would simplify it into 3 major key points. I would definitely say time. Time is of the essence for any buyer. And then I would say your real estate agent is super important, and so is your lender. Um, I do want to dive deep into each one of these 3 points. Time is really important because if you're planning to buy your house, if you're watching this and you're planning to buy your house within the next year or maybe even less than that, I would say start today. If you, and the reason for that is because one, it will alleviate a lot of stress, and two, it I've seen a lot of buyers almost walk with disappointment when they show up and they're like, "Hey, Cynthia, I want to buy my house in a week," right? But
Mm,
then we have to fix their credit, or maybe they run their own business and they had a lot of, deductions that they added onto their taxes. So, like, it all depends for everyone. And so, if you don't want to get discouraged when you meet with someone, I think proper planning in place and time will save you a lot of that. Um, and I've seen also, like, to contradict that, I've also have clients who have showed up and they're planning to buy in 6 months, and then once we get them together with the lender, they're ready to go,
yeah.
so it could work both ways. For point number 2, your real estate agent, it's really important because you need to you know, not go based off of what Zillow tells you or who gets sent to you.
hmm
I think that you definitely want to reach out to a local real estate agent who you should definitely go out, get a coffee, grab some lunch, and get to know the agent's personality, their areas of expertise, what type of experience they've had, and not so much in like experience in years of real estate, because you know that you can learn so much in a year, in 2 years. And I've actually had clients who have worked with veteran agents that they've reached out to me because they've gotten nowhere. And I don't think necessarily it has to do with the agent. I think that for one particular case, I was working with a client. I don't know if we are even able to talk about this,
Yeah,
but
just not their names, but yeah.
yeah, so her situation was that she was a US citizen. Her husband was in he was undocumented, and so for him he had an I-10. So for those that don't know what that is someone that is here undocumented but report taxes,
hmm hmm
so the IRS gives them an I-10 number.
Yeah.
And so for this previous agent, even though they were a veteran, they had never worked with this type of client before.
Yeah.
So of course it was much more harder. And so when she reached out to me, I had already that experience. I had already gone through transactions with different clients in that area. So within a week, we were already shopping for a home. You know what
Yeah.
I'm
Yeah.
saying?
Well, I think what it boils down to is you got to find the broker, the realtor that is the best fit for you
Totally.
in your situation. And it's totally okay to interview and meet with several brokers, just like you should meet with multiple lenders.
Of
And
course,
so
yes.
as to your point, it's like when you're, the more time you give yourself up front while you're to do those things, to find your team, the
Yeah,
better, and then now you have
totally.
your team, and then you can get rolling from there.
Yes. And that's perfect because the third point is your lender. Your lender can make or break a deal,
Yeah.
And I think a lot of people don't realize the importance of what a lender has in a transaction. I've had, you really need a team that's going to problem solve, especially if you are financing to buy your home. Because, and this, we go through transactions. If you're financing something, there will be hiccups along the way, but you need a team that will know how to problem solve and act fast to get you to where you need to be.
Yeah, and also it's like, I think if you go to one bank or one lender, you go to your local bank, and
Mhm.
if they can't qualify you, it's also just a process of not giving up, or going to another lender and saying, okay, does this other lender have an option for me that this other lender
Yes,
didn't have? Because there's different first-time homebuyer programs out there that not everybody offers, and or
totally.
you might go, okay, oh, this is a great option, but you might talk to another lender and they might have another option that's slightly better.
Yes. Oh my God.
Yeah.
That's huge. I've seen a lot of buyers where they go to a bank because
Hmm.
that's all they know. They're
Yeah.
like, let's go to a bank
Yeah.
and see if we qualify for a
Usually where they
home.
bank, where they actually bank, or a credit union or whatever.
Yes. And so then, they're told you need 20% down,
Yeah.
right? And then that's where they're like, well, I don't have that money yet. And so they're working so hard for such a long time to make up the 20%.
Well,
And
that gets, so let's get to that question then. How much down? How much down do you need to buy a house?
zero,
Zero.
zero,
Yeah.
zero. Yeah, it's crazy. I think this is definitely a very controversial topic for some buyers.
Controversial.
Yes,
Okay.
because of PMI, right?
Oh yeah, yeah, yeah.
Yeah, I know so many buyers where they're like, they stop because they want to save that 20% to not pay PMI.
Which is private mortgage insurance, which is
Yes.
an extra cost every month. Yeah.
Yes, but the thing that they don't understand is that there are programs out there that that could cover up to 20% of your down payment with zero interest rate, no monthly payment, of course, as long as you don't refinance or sell your home.
Yeah, and also the private mortgage insurance, even if you need to have that and it adds to your payment because you're putting a zero down or a low down program, because that's all you can do.
Mm-hmm.
In some cases, as you grow your equity, you can actually get that taken off. So once you
Yeah.
get to 20% equity, then it could come off later. So, just then you can actually get into a home sooner.
Yes.
And I think in this environment, when we talk about zero down, when it's a really hot market and low inventory, it's really difficult to get closing costs covered.
Mm-hmm.
But I think I read that something like, it's I think over 50% of transactions that are financed right now,
Mm-hmm.
the seller is paying some form of the buyer's closing costs and loan fees,
Mm-hmm.
to there when you're truly getting zero down on the principal loan, but then also closing credit too.
Yeah. Or a buy down.
Yeah, or that's a great point. So to explain that a little bit.
Yeah. Well, yes, let me explain that. I actually wanted to talk about something else,
Oh,
which
sure.
I
Okay,
found
sorry.
super interesting.
Okay.
So, talking about PMI,
Yeah.
right? Waiting until you have 20% in equity.
Yeah.
There recently in my sister's transaction, so I was able to help my sister buy her first home.
Yeah.
And for her home, we actually found out that when we got the appraisal done, she had already 15K in equity
Mm,
from the purchase of her house.
cool.
So, easily, and she applied for the first time home buyers program, 0% down. And then on top of that, I know that with the plans that they're having, you know, they will be they're going to get the PMI removed sooner rather than later.
Yeah.
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 So that's really cool.
Yeah. That is great.
Yeah. And so going back to your other
Yeah,
question,
yeah.
what was it?
So you a buy down, so you can get closing credit to pay off or to pay your loan fees, but you can also get your rate lowered too, right?
Yes, yes. And I think that's really interesting. There's a lot of people that right now, what I hear the most is interest rates are too high, prices are really high, and most of the time, if you're buying, most of my buyers, what they focus on is their monthly payment. They
Mm-hmm.
could qualify for 500, 800, but realistically, how much are they able to pay a month
Yeah,
without them being
too
house
stressed
poor?
out. Yeah,
You know what I'm
exactly.
saying?
Yeah,
Yeah. So, but that's where a buy down comes into play. Right now, what are we seeing? 4 to 5 months of inventory, right?
yeah, yeah.
So, when was the last time that we saw this?
4 to 5 months of inventory. It's been at least 10 years, probably.
Wow.
Yeah,
So
yeah,
that's crazy.
yeah,
I thought before COVID. So
yeah.
I was thinking 4 or 5 years.
No, no.
So imagine how much buying power you have right now. If before, when it was a seller's market, we were already able to negotiate closing costs, right now that we're seeing 4 to 5 months of inventory, imagine instead of not only asking for closing cost credits, but if we get a really motivated seller, maybe we can ask for additional funds to buy down your rate.
Yeah.
So a buy down, what it does if is it all depends, but usually it's a 2-1 buy down. Your first year, you get, let's say interest rates are at 6%. Your first year when you pay your mortgage, it's gonna drop to 4%.
Yeah.
Then the following year drops or goes up to 5%. And then the
Yeah.
third year goes back to its normal rate, which was 6%. But, with what's going on in today's day, you have war, you have inflation, whatever it gives you enough time to maybe refinance later. And let's say, like, maybe you're comfortable already with a 6% interest rate. How much better won't it be if you already get that buy down
Well,
included in
yeah, and
there?
it's closer to 7% right now, but
Oh,
yes,
yeah.
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 But yeah, but no, but no, and then there's also the permanent buy downs too,
Ooh.
we can use their closing cost to buy down the rate for the full 30-year term if they
Mm-hmm.
don't want to go through that. But the broader point here, I think, is don't just take the mortgage calculator and then it says 6.89, and I gotta assume 6.89. If you're right, maybe instead of taking $40,000 off the price, if we take $10,000 off the price and then ask for $30,000 to pay for your closing cost and lower the rate a bunch, or lower the rate for 1 or 2 years, like you explained a lot. There's a lot of that going on. So it can be really, really helpful and empowering on helping you make it happen. So that's a really,
Yeah.
really astute point. Let's get to, like, in Skagit County specifically, what areas and what types of properties are most affordable? Where are you seeing the most opportunities right now?
Ooh, Cedar Willie.
Cedro.
Definitely Cedar Willie.
Okay.
I think property taxes are much lower, but on top of that, and you're gonna help me out with this one.
Okay.
On top of that, I think that Cedar Willie is definitely growing at a
Yeah.
really
It's
fast rate.
yeah, it's an up and coming.
Yeah, and so even if you're not a buyer, let's say you're a seller watching this,
Yeah.
if you have a home or if you're a buyer and your parents have a home where they have a back alley to their house, you
Mm,
have the main road and then you have an alley, you have to check in with the county or the city,
mm,
but that could be a possible ADU or DADU that you can add in the
mm.
back of your lot.
Yeah, or even if it's not, even if there's no back alley, if it's just an oversized lot where there's just room
Ooh, yeah.
for another house. So the properties the land's worth more now, or it's going to be worth more in the future, because there's now more upside to be able to develop your property in
Hmm.
Cedar Woolley. So that makes it even a better investment. But Cedar Woolley, would you say, kind of in the surrounding areas, maybe a little bit of Burlington, kind of just that whole kind of area of the valley is where you can find better deals? And then what type of properties?
Ooh, yeah. So you get a mix of, definitely a lot of manufactured homes, and the parks are very nice as
Mhm.
well. You get condos. There's a lot of condos that are being built right now. And then on top of that, you have your residential houses that come with the land, or manufactured homes that also come tied down to the land.
Yeah, and a manufactured home that's tied down to the land. Um, it you're that's residential. You own your property, and a lot of those. Sometimes the rate's a little bit more, but with FHA the rate's the same.
Hmm.
And yeah, Cedar Woolley and the surrounding area of Skagit Valley has a number of those. Sometimes on acreage,
Yes,
relatively
yes.
relatively affordably if you're looking out for good stuff. So okay, that's all really good. Um, let's say that we're moving forward. Let's say they have their team, they find their qualification, they're qualified, they find the program, you find them a place or somebody finds them a place. Um, they write the offer, they get their closing cost credit. Once we're under contract, let's go through just kind of some of the fundamentals of what a buyer can expect and plan for during the transaction.
Yeah, so let's say you find your home,
Yep.
right? You find your home, it's the one.
Hmm.
First step is we're going to negotiate and submit your offer. You've
Yeah.
already walked through the house, so you know, and your agent should know already, s- have a rough idea what the conditions of the roof are. Is there any leaks inside? That can show any um, water,
Well, I
what
mean,
it's.
you're actually pointing out something I didn't frame the question quite right. I guess you find the house, you you're you want to we want to like take a good look at the house
Yes,
before we negotiate. So
yes,
that's what you're talking about is like let's look at the structural stuff first before we even submit our offer.
yes.
Yeah, for the big ticket stuff.
Totally. And
Yeah.
if they're financing, like with FHA, I already know that we need to be checking the water heater. Is it double strapped? What type of heating source does it have? Is it a furnace? What ages, what
Mm,
condition the furnace is in? We're looking at the crawl space. Sometimes, you know, we can easily, like, they might be really tight spaces where we can
mm,
just like pass our phone under and
mm.
kind of see what it looks like. But we want to make sure insulation is in place. The roof is going to be one of the most expensive things you can
Run into, yeah.
run into in a house. And
Yeah.
I think as a first time home buyer, you really just want to make sure that the roof is in a good condition
Hmm.
to where they don't come across having
Have
to fix a roof.
Yeah, yeah, deal with that right away. So we're we're looking at the house. Obviously, there's the cosmetics versus the structural stuff. We're putting our offer together based on kind of what we can see, what we know we got to deal with, right? And then where do we go from there?
If my clients are like, Cynthia, this is a house,
Hmm.
we're submitting an offer,
Hmm.
but at a price where whatever needs to be fixed will cover.
Hmm.
And they're obvious. So we submit the offer at the price we feel comfortable submitting.
Hmm.
Then my clients are going to deposit the earnest money. That's usually within the 3 days after mutual acceptance. And then right after, it's where it gets fun and interesting, right? You get inspection period and appraisal.
Hmm.
And then at the end, then you leave it up to the lenders. This is where the buyers are being requested. So the lender will request the buyers to give them their most recent pay stubs. Most
Hmm.
recent pay stubs to get the loan wrapped up,
Hmm.
sent to underwriting to get clear to close, and then you're at title and escrow signing your new home.
Yeah, and I think with the inspection period, that's a really key period because you know, you we look at everything as it is, and then you make an offer. And based on what we know,
Mm-hmm.
then you have that inspection period. And then if there's surprises that you didn't expect, we can get your earnest money back
Mm-hmm.
or we can negotiate, right? So,
Totally.
yeah, so that's probably like that's the other really super critical period that we're a big part of. And then, as you said, the lender is kind of taking the wheel from there for the most part, although
Yes.
we're still there with them, obviously, through the finish line and beyond.
Yes.
Yeah. So, that's all really good stuff. We can always have people reach out to you and DM you if they have questions. I think this was really good, and you did a great job. And thank you for coming on and going
Yeah.
through everything. And thank you for watching or listening, you guys.
Yeah, thanks. Thanks, Paul.